Welcome to Right Side Trading, where you can learn how to trade on the right side with confidence. Today is June 18, 2016. It is a Saturday, and we will be bringing you the Market Weekly Review. But before we do so, one of the things I want to do is let's take you to our home page and scroll down just a little bit to our disclosure page. And we do want to bring this to your attention right here, this area that I'm highlighting, that says that our products and services are provided solely for educational purposes. Our written and verbal statements, including those provided on our websites by staff members, testimonial individuals, affiliates, and clients, are personal judgments and should be regarded as such. These written and verbal statements do not constitute investment advice. What that means basically is that the government wants us to let you know that we are not licensed financial professionals, and so when it comes to the stock market in particular, trading and investing, make sure you seek the advice of competent financial and licensed advisors. We are just simply people who look at charts and give you our opinions as to like what we do see. All right, so now that that is out of the way, let's do this. Let's go here, and here is the chart of the SPX, okay? And what we're looking at is what literally took place. If you guys remember from last week's video, one of the things that we highlighted was the fact that we wanted to see, let me draw this, put this right here. We wanted to make sure that the market did not close below this line, okay? And then if it did, that spelled trouble, okay? And on Monday, we got that. So as soon as that took place, that was something that you had to definitely be aware of, okay? And start looking at this market not being so strong anymore, at least for the time being. And what we had is exactly what followed, where the market just kind of stayed flat. Now, we had the Feds coming out trying to boost the market up, but that didn't really take place. And then the market kind of fell back off. We had a little rally on Thursday, but then the sell-off began again on Friday. So the question becomes, what happens now, okay? And as you can recall, what we do here at Right Side Trading is try to prepare ourselves for what's going to happen on the right side of the chart, not try to talk about all the stuff that happened on the left side of the chart, which is already in hindsight, and anybody can tell you the good, the bad, and the ugly in the hindsight. But trading is about learning what to do on the right side of the chart so we can, try to anticipate making money. And so that is what we teach. That is what we talk about. So let's go into that. All right. So some of the things that we're looking at are these lines that are already pre-drawn, because I was doing a webinar last week talking about that. So I just kind of left that on my chart. And the first thing is we're looking at this downward trending line right here. Okay. This was the resistance line that we had back there, where it broke out above that. And so we can always expect that resistance line to be some kind of support in the future, okay? So one of the things we're anticipating was the fact that this market will go down, come to this resistance line, the previous resistance line, which is now support, and possibly bounce back off of that, okay? So if we get the market to do that, that is probably what could happen. Now, in addition to that, we're looking at this hammer signal right here, this hammer candle right here, and using that whole candle from top to bottom as a zone where there's a potential for this market to reverse, okay? And so if that happens, we're looking at something as early as this top line right here and as late as this bottom line right here. Simply put, if we have the market close below here at any time, I would say watch out below, because we probably be coming all the way down to this area right here, okay? So the question still remains, are we in a bear market yet or not? And the answer is that right now we cannot say that we are fully bearish, okay? We are bearish because the trend has been going down. If you look from up here, down here, the trend has been going down. However, we cannot say that we are fully bearish until we close, and I say close, not a break, but a close. That means that by 4 o'clock of any day, if the close at 4 o'clock is below this line, that could spell some big trouble to the downside. Until then, we are holding off on saying that this market is bearish, okay? And to be quite honest, the true bearishness of this market would be when it actually closes below this line right here, okay? But until then, we are just looking at this as a possible pullback, okay? We're looking at this as a possible pullback, and the reason why is if we look from down here, the market had rallied, it pulled back over here, it went a little higher, okay? It went higher than this highest point right here, and then it pulled back again, okay? There's nothing wrong with that. As a matter of fact, that is part of just a healthy bullish market where you see a rally, you see it kind of like pull back, which is kind of like a rest period in a sense. It tries to go up again, it pulls back. You know, there's a lot of consolidation that is taking place where people are distributing their wealth in a sense, you know. So that's not to be unexpected. The question becomes, when has this change of trend reversed where now we are looking at this market going down? The other thing I can say about this is if we look at this, the market's going higher, it pulled back, you know, so we had a high and then we had a low and then we had a higher high. So we are still in the definition of an uptrend, okay, which is higher high, higher low, higher high, higher low. Okay, so right now we still haven't made a lower low. Okay, so this trend would be reversed once we have a lower low. Okay, and especially if we have a close below here, because that would definitely change the whole trend. All right, so until that happens, we just have to watch out. So I've highlighted this area in orange right here as an area of potential reversal. That if the market comes down over here, we could have a double bottom. We could have a retest. It could be any one of those kind of situations happening. But if we have a close below here, just like we had a close below here, and I said this market would then start heading further down and expected to come down here. And look at this, we almost made it down here. So, I mean, it might just be enough. So we'll have to wait and see. We had a reversal signal that kind of really failed in a sense on Friday. We had a signal on Thursday with this bullish candle right here, which is a bullish engulfing signal. And then, you know, we didn't have the follow through for that. So we just have to wait and see, you know, whether or not this market is really going to keep on going down or not. Okay. So what do? You just simply wait. You know, sometimes you just have to wait until the market gives you clear signals. And why is that? Because right now, if you were bearish, stay bearish. If you were bullish, depending on where you are bullish, you know, if you were bullish down here, that's great. I would say stay there. If you were still even bullish down here, you might even consider staying bullish, okay? But if you just got in, you know, even just on Thursday, I'll say still wait to see what happens. You might end up taking some losses. So depending on your risk tolerance will determine how long you want to stay in. But I would say this, if we close below here, you can expect this market to keep on going down. And so at this point in time, anybody who's being bullish, I would say that you want to get out. Now, anything can change as time goes on. So it is important that you understand how to read the chart. Again, we don't predict the future. All we do is read what we see in front of us. So we are not predictors of the future. We're not prophets of the future. More so than we just read what the market is telling us. Okay? And right now, the market is telling us don't do anything. Okay? That's all it's telling us right now. Don't do anything. If you were bearish, keep it bearish. If you were bullish, keep it bullish. But you do not want to be entering any positions just yet right now. Okay? Now, if you want to get out of a trade, that's okay. Okay? It never hurts to get out of a trade and keep your money in cash. Okay? But what you don't want to do, what we don't want to see is people getting into this market when there are no real clues or signs or signals that's telling us where this market is really trying to go just yet. Okay, so we can anticipate waiting to see what the market tells us somewhere around here. We can anticipate seeing what the market tells us as early as next week. Remember, we have Janet Yellen, who's going to be speaking on Tuesday and Wednesday morning. So we have to be aware of that and see whether that's going to affect the market in some kind of way or not. But until all that takes place, we just wait to see what happens. Okay, I believe that once we wait, the market will show us what it's trying to do. okay, whether it's trying to go up or whether it's trying to go down. You will see that very clearly, and at that point in time, you can make decisions then. But again, just until then, you just have to wait. If we go to a bigger time frame, say the weekly chart, again, this is still just a slight pullback, in an uptrend. We've had a rally, we've had a pullback, we had another rally, and then this is pullback again. So there's still no cause for alarm just yet, all right? But again, this point down here is where it has to be. Now, let me show you one other stock, which is the Nasdaq. And one of the things that you can see on the Nasdaq is pretty much the same thing. Some people look at this and say this is a double top, okay, and then maybe the market might come back down again. But again, we just really have to wait until we get a close below this area right here. Now, out of all the indexes, the Nasdaq has been the weakest one, okay? But again, we just have to wait and see. If you look at the Dow Transportation, all right, so this is the Dow Transportation right here, okay? This is the Dow Transportation on a weekly chart. Now, notice how we dipped below that, okay? So that's not a good thing, but at the end of the day, it rallied right back up again, okay? So a close talking about, okay, a close below here. So the fact that it came down here, but it pushed it back up, it's telling us that, hey, you know what? We are still in the area of no man's land right here, okay? That's kind of like what we're looking at. The daily chart right here, all right, we are showing some signs of a possible reversal, okay? Just some signs of some possible reversals. But it still needs to be confirmed that this really is a reversal, okay? We have a double bottom right here. We have some candlestick signals that's trying to tell us that it's ready to go up, but nothing is really confirmed just yet. So we still just need to wait. So we are just at that point where we need to see what the market is really trying to do. Again, we get a close below here, and you can expect the market to go lower. If not, we'll see what happens, all right? So that's pretty much it. Just wait and see what happens is what we're looking at. And again, go to our website. You can check out videos on our website about what we do. Here's a very good video on how to trade what we call bouncing stocks. And check out our courses, check out our blogs. We'll keep on updating stuff every week. But for now, just wait and see what the market does, and at least you have some ideas of like what to be looking out for. And hopefully that helps you with your confidence in trading, because that's what we're all about, is learning to trade on the right side with confidence. We'll see you guys next week. Bye-bye.